I'm absolutely amazed. If you look at the course of gold from even 2018, it tops out at 2000. It then goes back to 1600 in 2022. It's 2022 to now that is most impressive because a $1,600 move to 3,300, so in essence, a doubling of price occurred really, what, in just a short period of time, 3 years. So am I as enthusiastic that we'll see it go from 3,300 to 4,500? No. My year-end call right now is between 36 and $3,700 for gold. 36 more based on spot, and then futures closer to 37. Unless one of these fundamental events that we've talked about, if there's that big shift. Because if there is that big shift, that changes everything. And we can't, or I can't predict if and when those events will occur. And I have to be sensitive to the fact that that would change the environment completely. So I am a little bit more frothy or frosty, let's say, in
Yeah.
terms of the upside potential, but I still believe there is upside potential in gold, much more limited to what we've recently seen.
Gold prices climbed to a one-week high on Thursday, supported by renewed tensions in the Middle East and a stream of cooler U.S. economic data that has reignited speculation around potential Federal Reserve rate cuts. The move higher reinforces gold's role as both a hedge against geopolitical instability and a barometer of monetary policy shifts, with investors seeking shelter amid economic and political crosscurrents. Gary Wagner, editor of thegoldforecast.com, tempers expectations of a meteoric rise in gold, stating that while a jump from $3,300 to $4,500 is unlikely in the near term, a steady climb toward $3,600 to $3,700 by year-end is well within reach. Wagner expects spot prices to hover near $3,600, with futures possibly touching $3,700, assuming supportive macroeconomic conditions persist. Despite recent consolidation since hitting an all-time high of $3,500 in late April, analysts at UBS remain bullish, noting that the current pause in gold's rally is constructive and likely a setup for the next leg higher. Bullish gold sentiment is unchanged, the bank noted, emphasizing that shifting developments around U.S. tariffs, economic indicators, and the Federal Reserve's response continue to shape market sentiment. UBS also highlights gold's value as a diversification tool amid a backdrop of fiscal and geopolitical uncertainty. High levels of uncertainty around U.S. tariffs, fiscal policy, and the Fed's consequent response reinforce the appeal to diversify portfolios, wherein gold stands out as an attractive option, the bank stated. Wagner points to trade policy, particularly the unpredictable direction of tariffs and negotiations under former President Trump, as a major driver of gold market behavior. He adds that a weakening U.S. dollar continues to support both gold and silver prices, amplifying the safe haven bid regardless of other macro events. Adding to the bullish case, TD Securities has initiated a tactical long position in gold, citing escalating instability in the Middle East. The firm views gold as a low-risk safe haven asset in times of rising geopolitical tension, reinforcing the metal's role as a reliable hedge in portfolios during periods of global unrest. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I'm going to look at a couple of different charts. I just want to verify that I did properly get it on the screen.
We see it.
If so, correct? So we're looking at a daily chart, standard candlestick format of gold futures, continuous contract, now reflecting the August contract. And this green line here represents a 50-day moving average. 50-day moving average, simply put, it's a golden rule for us technical analysts. A stock or commodity above the 50-day moving average is in a bullish short-term trend. It's not sideways, it's bullish. Below it is bearish. And we use that, and we use for the longest term 200-day, and we use 100-day. But as you can see, at the beginning of January, gold broke back up above that. And from there, it has maintained a status of being above the 50-day moving average, really for the entire year. Now, the other thing you want to look at is how close or far it is. So immediately there was some real width between current pricing and the 50-day, with the pricing being well above that. If you look at right now, what we are seeing is that it is still above it, but it challenged it back in the middle of May where you had some lows that broke below it, but not an open or closing price. So we're looking at that. The other thing is this is a basic Fibonacci retracement. This line here with these two blacks, the bottom one is the lower level around 3,000 and then 3,500. And so what we're going to use that data for is really to discuss major and minor levels of support. And so major support, which corresponds to these lows mid-May, was the 61.8% Fibonacci retracement. So we had an absolute correction right here. After going parabolic, we would look at this is an A, B, C correction. So in Elliott wave count, we're back into a bullish momentum or a wave one. That tells you that all things being equal, if Elliott wave carries some real validity in it, we should see higher prices unless it breaks below certain things. The first level of support is right at around 33.30. That's the 38.2% Fib retracement level. And you've had gold go into, open above, or close below. It's not been solid, but as of really Monday, June 9th, real recently, it's now trading above it and moving past that point. And then 50%, I'm not giving that much credence. So when you take that all into consideration, excuse me, that bodes well. It tells you that we are still looking at a bullish market, certainly not near the all-time record highs of 3,500, but realistically, the highs are based upon, this is the highest closing price in history for gold futures, right around 34.40, 34.70. And so that's the target, the upside target. This next gold chart we'll look at looks at something a little bit different. It does have the Fib retracement, but we've identified a compression triangle based on the price ratio between these lows at 3,000 and 3,500. And so what we've gotten is lower highs, higher lows. That's how you create that compression triangle. We did get a breakout above the upper level line back on June 2nd. And since that time, it has stayed above that particular area, but this isn't the kind of breakout we would typically look for a compression triangle, because typically what we look for as you get a series of lower highs and higher lows, as it reaches the apex and it breaks, it releases energy and you get this big clip up. We're not seeing that. In other words, we had a solid day. I believe this was, well, let's just verify what this was, but this was an $81 day. And then from there, it remained elevated, but now has been coming down. And that tells me that people are bullish, but they're not nearly as bullish as they have been. And so for that reason, a break below this trend line here, or call it 3,300, will not bode well for a bullish demeanor. But as long as it remains above the 50-day moving average, which is currently at 33, call it 3308, 3,305 to 3,310. As long as it remains above that price point on a technical level, it is still bullish. So that is my assessment for gold. In terms of upside targets, 3440 is resistance. And of course, 3,500 absolute major resistance. Support begins at 3,300. And with major support, believe it or not, down at around 3,200, because we've seen this, it was a $500 range between April the 4th and April the 21st. So in about under 3 weeks. And so that's what we want to see. And that is not going to be contingent on technicals. That's going to be contingent on the fundamental events as they work through the cycle. And a lot of it has to do with the trade negotiations, because Trump has already stated he's doing tariffs. He wants to kind of even the playing field. Now, what are the trade agreements that will be reached? Because from my understanding, very few have been inked. And that's where we're going to see something happen.
Gold futures extended their strong rally this week, breaking decisively above the key $3,400 per ounce level as a range of economic and geopolitical risks continue to fuel investor caution. The surge reflects gold's classic safe haven appeal, with markets reacting to a confluence of rising global tensions and macroeconomic uncertainty. GaryWagner emphasizes that gold historically thrives in periods of heightened uncertainty. While there has been some optimism surrounding a potential trade deal, including progress in U.S.-China negotiations, many traders remain wary. According to Wagner, if such agreements become concrete and stability returns, it could trigger profit-taking in the gold market. In more predictable environments, gold typically sees reduced momentum as the fear premium fades. In midday U.S. trading on Thursday, gold prices maintained substantial gains, bolstered by elevated risk aversion across financial markets. The U.S. government's decision to evacuate non-essential personnel from parts of the Middle East has intensified fears of regional escalation. This comes ahead of scheduled Iran-U.S. nuclear talks in Oman, while reports also indicate that Israel is actively weighing potential strikes on Iranian nuclear sites. In response, Iran announced the construction of a new nuclear facility and issued threats against U.S. citizens in the region should its operations come under attack. Let's get back to the interview.
Well, to answer the question of why there's a divergence, there's a couple of theories, but what's really important to note is, as you correctly said, we've seen gold hit multiple all-time record highs. At the same time, silver was extremely range-bound, capping out at around $33, $34 and trading within that narrow range. And just a week or so ago, it caught everybody by surprise in that we started to see silver moving, with gold kind of being caught or trapped within a defined range. One of the theories that, and it's the one that I happen to believe the most, is that because gold isn't hardly trending to the upside the way we've seen it trend, some traders switch to silver and move the precious silver price higher. That's one theory, but what I can tell you is we're currently at prices that we haven't seen since 2012, and that's interesting. When we think about what happened after Liberation Day, it went down for a little bit as the equities did, but then gold popped. In fact, it popped from about $3,000 per ounce, and in under 2 weeks, and I'm addressing the futures contract, but spot silver did the same thing. Spot silver went to 3,500, futures went above that. So you had a $500 move in a short period of time, and then from there we've had a series of the market coming down, forming a low and then a lower high. And as you'll see when we look at some charts, it can be identified as a compression triangle. They still are. Those are at the forefront, and the trade negotiations, I mean, the shock of the tariffs has kind of worn off, but now realize we had an announcement very recently by Trump that they've come to a tentative agreement by the Chinese and the United States negotiators in London. However, gold went up $24. What that tells me is until we see it inked, until we see, it's not unusual for President Trump to be overly optimistic. I hope what he's saying is absolutely correct, but there's not enough information out yet for us to say, you know what, we did it. We have a negotiation. Now we have trade parameters with China. They're our largest trading partner. We're the two largest economies in the world. And for us to be at odds with these tariffs and reciprocal tariffs, that creates immense uncertainty. Now, once that agreement's reached and we see where the tariffs go to, which in China are currently at 30%, we'll have a better idea. But if they remain elevated and there will be some tariffs, the question becomes, what kind of inflationary pressures will we see down the road? There's going to be a tremendous lag. It's going to take a couple of months if there's going to be a big uptick because of the change in prices to consumers. But we don't know that yet. And when we looked at the latest CPI report, inflation's actually cooling. That creates a lot of uncertainty. And when you get uncertainty, that supports gold prices. So even though Trump came out with an announcement that they've reached an agreement, the fact that gold went up tells us that the bulk of traders aren't convinced that this is etched in stone. The deal is inked, so to speak. Major support's at around 3,200. It's at 3,340. A break below that would first break below the 50-day moving average. It would break through recent lows. The lowest low that we had after the big clip from 3,000 to 3,500, it went to 31.23. A break below 3,100, and that could easily signal that we have moved from a bullish market that slowed down to the beginning of a bear market, because obviously at some point gold will react the other way. We saw that in 2011 to the middle of 2011, where we saw it run up tremendously, from 1,000 up to the all-time record high, then just above 1,900. And just as everyone thought 1,900, 2,000 is the next move, it began to sell off. And first it went between 1,800 and 1,900. Then it broke to 1,535. And once it broke below that, we had a multi-5-year deep correction in gold, not finding support till $1,000 per ounce. And that was in February 2015. So could it go lower? Yeah, absolutely. I've seen it happen before when I didn't expect it. Fool me once, that potential not only is possible, I believe at some point we will see gold have a realistic, sizable correction.
What does that mean?
What that means is that as fast and as high as it's moved up, where it's in essence doubled from the beginning of the year. If we take a look at what prices were in
20,
it was $2,600 at the beginning of this year. Half year later, it's at 3,300. At the point where things, either dollar strength, trade issues are resolved, you will get a correction. In other words, on a technical basis, I can't tell you what price point that would happen. It will be based on a shift in fundamental events. And if and when those occur, you could see a real sizable price correction in gold. Considering that it has moved up $900 in about a year, what kind of correction could you expect? Anywhere between $300 and $700 on the way down to make up for this huge move up. But again, that's not going to be based on it breaking through a certain price level. That's going to be based on a real shift in the fundamental environment, the tariffs, what happens in terms of inflation, the geopolitical tensions to some degree, but a lesser degree, and dollar strength or weakness. Those are the three most important variables, the last one being interest rate cuts by the Fed.
Amid an increasingly volatile global landscape, gold remains a steadfast asset, providing a reliable shield against financial and political uncertainty. Recent price action reflects growing investor caution in response to mounting regional conflicts and inconsistent policy signals. With strategic positioning by major institutions and persistent risk-off sentiment, the metal remains a cornerstone for capital preservation. Momentum may shift, but gold's defensive allure appears far from fading. Could this renewed wave of global tension push gold into a sustained higher range, or will upcoming policy shifts cool the rally's momentum? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.